Good evening. Can I welcome those online and those watching from members of the public, welcome you to this meeting of the Audit Committee of the 16th of February. My name is John Barnes and I'm the chairman of the committee. On my left is the chief executive and on my right, the principal finance officer, Charlotte Spendley. We also have with us Bhutta Singh, who is looks after our governance. Can I ask whether the minutes are acceptable to everybody? Yeah? In which case I will sign those at the conclusion of the meeting. Are there any apologies for absence?
Yes, Chair. Apologies received from Councillor Cooper.
Okay. Any additional agenda items?
No, there are none.
There are none. Disclosure of interests and dispensations. Councillor Thomas.
As Chair of the Housing Company.
Yes, Councillor Byrne. I'm not sure whether, in which case I will declare that I'm the Vice Chairman of Etchingham Parish Council. I think there are no other interests. That is obviously not in any way prejudicial. In which case we move on to item 5, the external audit. And we have with us online, I think, Aid, who is the representative of our external auditors. Charlotte, do you want to introduce, or shall we go straight to Aid to take us through the paper?
I'll just say a couple of words, if that's okay,
Yep.
Chair. Thank you very much, Chair. Yes, the Audit Committee will recall that we previously considered the annual audit report covering the VFM assessment back in December. An external audit, as the Chair said, are here this evening to present the findings in respect of the statement of accounts. So I'll let them introduce that work and take you through their report itself. I just wanted to note for the committee that Appendix B to your report is the letter of representation. It's in a standard form. There's nothing exceptional about that letter of representation that we're seeking approval to sign. It just publicly confirms the accuracy and completeness of our accounts. I just wanted to make the committee aware that Grant Thornton asked just for a small amendment to that document late last week, and that's a change since the publication, but it's a very small change, so I just wanted to highlight what that was to the committee. So on their updated version, which is the one that I'll ask the Chair to sign if you're comfortable with it, is exactly as is tabled in your report, apart from the very final table, the impact of unadjusted misstatements in the prior year won't need now to be included in that letter of representation. Everything else about the document that's in front of you remains the same. So I'll hand over to Addy now, if that's okay, Chair, and let him take you through the paper.
Welcome. Comment on the paper, please.
Thank you very much, Chair, and good evening to everybody. I'll take you very briefly through the audit findings report, which summarizes the audit of your audits for 24-25 statement of accounts. Very briefly, on page 12 of your pack, I'll be talking to that page. Our work was scheduled to take place between September and December, but has extended into the current year due to late receipts of supporting records for IFRS 16 and group audits, group accounts queries. At the time we issued the report in front of you, the main areas that were actually outstanding related to those two areas, and I'm happy to report at this meeting that our work on those areas are now complete, and my proposal is to issue an unqualified opinion shortly after the committee hopefully approves the accounts this evening and notes our report. Just taking very briefly through the rest of the report, we identified some adjustments to your accounts. None of those were material. Similarly, we did identify some unadjusted misstatements, which Charlotte alluded to just earlier on. And again, I'm happy to report that those were not material in aggregate or individually. And the basis of reporting that is merely to make sure the committee is fully cited on both the adjusted and unadjusted misstatements identified from our work. We also discussed and agreed recommendations with the management. There were 6 in total, but only one of them was high rated. So again, some good progress, continues to be good progress from the team, and we'll follow up on recommendations in 25-26 audit. Taking you briefly through the other pages, page 16 of your pack sets out the summary of IFRS 16, and then excuse me, no significant issues arising from that. Pages 23 to 27 takes you through the significant risk areas which we previously highlighted in our audit plans. Again, happy to report there are no significant issues for me to raise with the committee. Page 29 onwards sets out the other areas, including our review of the loan to the housing company and our challenge in terms of reviewing the value of the loan as year-end. Happy to report that review of the work that management put together. We were happy with the assumptions in terms of the expected credit loss that they've calculated. However, just to highlight for committee that clearly a number of those assumptions do crystallize over the next year or two, and it will be one of those areas that will certainly recommend that the committee continues to pay close attention to, which I'm sure it's on its radar. The next few pages summarizes our key assumptions. And the last area that I'll probably highlight in terms of my summary is on page 58, which sets out our scale fees for the audit and the additional fees for IFRS 16 and the group audit issues I referred to at the beginning. Chair, I will stop there and take any questions on our reports.
Thank you very much. Are there any questions to our auditors? I think silence means that we're very happy with your report. We are grateful. We know you're a new team. You've got on, I think, extremely well with our officers, and that is not to prejudice your independence in any way. I think, obviously, the uplift of the fees is noted. The recommendations, the only one that's I will ask Charlotte to comment on. But really, you've given us a pretty clean bill of health. We're probably in as robust a state as most of the best authorities in local government are. But we're also facing, as is clear, quite substantial financial problems as we go forward. So the savings program will remain a very important part of what we're doing in order to stay financially afloat. I don't think, Charlotte, you want to say anything else other than on the one recommendation that has high importance.
Thank you, Chair. Yes, the one high recommendation is on page 44 of the pack, and it relates to administration access. So in the work that the auditors performed, they did identify a control weakness around systems administrators having system administration rights over our financial system, but also the ability to post journals. And obviously from a kind of perfect segregation of duties perspective, we would not have that approach ourselves. Unfortunately, we are a very small finance team, so we have in the management response committed to explore the feasibility of changing that approach. The key reason that we have that currently is that we are down some posts whilst we recruit new individuals. So we're hoping as the year progresses, and we've just actually appointed one officer, which will help mitigate part of that, and we will be going out shortly to recruit another. So we take on board the recommendation, but we have to balance it with the operational feasibility of running the service as well. So we understand why the recommendation's made, and we definitely will be exploring the feasibility of implementing it as far as is possible. Thank you.
I think we agree in principle with the auditors, but whether we can do something about it in practice is for further examination. Councillor Byrne.
Just for reassurance, I'm sure that all journal entries are more than visible to you. So even though in theory something could go wrong before we put new governments in place, at the moment I'm pretty sure you must be happy with what is happening at the moment. Yes.
Yes, I'm satisfied with the approach that we're taking, and the auditors do review the journal, these particular types of journals that we're talking about. So I feel that we have fair oversight. I do take their point though, you know, it isn't actually the scenario that we would want to have either. It's just operationally where we are right now. But I don't have concerns specifically about
But it would be visible if you were seeing more journal entries than more posting than, yeah. Okay.
We did explore whether there was any other way of doing it. I couldn't see that there was, frankly. No, nobody else wants to comment, in which case we need to thank the auditors, resolve that we receive the findings of audit, and note the progress that's already been made towards dealing with those recommendations. Secondly, we will need to resolve that I sign the letter of representation, which is in Appendix B of the report. Nobody dissents from that, I take it. We better formally vote, I think. Done. Agreed unanimously. In which case, we move on to the statement of accounts. Charlotte.
Ola's actually going to take this one.
Oh, Ola is going. Ola,
Thank you, Chair. Good evening, everyone. The committee previously considered the draft statement of accounts for 24-25 ahead of the audit commencing. And as Ade mentioned, there were a number of changes that we needed to make to the accounts. I would like to reassure everyone that in terms of the impact on the council taxpayer, nothing has changed, because the 5 changes that we did make did not have any impact on the reserves. The changes that we made are set out on page 72 of the report of your pack, and they are the following. There was an undervaluation of an investment property by £500,000, and that was because we provided information to the valuers which was not as up to date as it could have been. We were not aware of some circumstances, and we didn't have evidence for the figure that we provided. Therefore, what happened was we needed to increase the value of investment properties by £500,000. That was subsequently reversed in the movement in movement in reserve statement. Therefore, it had no impact on the council taxpayer and the reserves. The second change that we made was the reclassification of an asset from investment properties to operational land and buildings. As a result, there was a different methodology of valuation, and it resulted in an increase to the value of that particular asset of £267,000. As was the case in the previous example, this then got reversed in the MERS, therefore no impact on the council taxpayer. The third error that we corrected was something actually that happened in 23-24. We erroneously put on our balance sheet capitalized expenditure which related to assets which were not ours, and they should never have been put on the balance sheet. They related to expenditure on the Delaware Pavilion, the capital works, and also on some grants that we paid to local businesses as part of the rural SPF funding from government. So these should have been expensed as REFCAs in 23-24, and they weren't. Therefore, what we did in 24-25, we removed them from the asset register, and we expensed them in the same area as they should have been done in 23-24. The next one was a change that we implemented as part of audit, and this one didn't result in any changes to the ledger. It was basically providing more information, more on a more granular level about short-term creditors. Basically, the auditors advised us that we didn't follow the code where it stated that any kind of grants received in advance should have been shown separately in the note. So that's what we did. So we broke up a larger amount of money in the note, and then we provided more detail behind it. This value was 688,000, and it is shown simply as a breakdown of a previously higher amount. And the last one that we did was something that again didn't have any, it had a nil effect on the comprehensive income and expenditure statement. It was an accounting for parliamentary elections, which should have been completely removed from both expenditure and income sides because it's an agency arrangement. And what it resulted in was reducing the amount of expenditure by 331,000, reducing by the equivalent amount the amount of income, and again it had a nil effect. So none of these five have actually had any kind of impact on reserves as such. The first three were reversed, and the fourth one was just providing more clarification, and the last one was actually had a nil effect on the CIS. There were two errors which we did not adjust, as Ade mentioned, and they were REFCOS expenditure of 32,500, again something resulting from 23-24, where we didn't accrue for something that we should have accrued, but we didn't have information about it at the time. And another one was pension-related entries, which were nothing to, well, they were not nothing to do with us, but they were, there was a finding in the report, an audit of pension accounts, and it was something that the East Sussex Pension Fund did not adjust themselves, and they didn't provide a new report from the actuary based on which we could have made changes. So because they didn't adjust it, it was a value which wasn't material. We didn't adjust for this one. So these are the changes that we made. Other than that, everything is as it was previously presented to yourselves at the previous audit committee meeting. Thank you. Have you got any questions?
Any questions about the accounts? Can I say it's an extremely helpful layman's statement that prefaces the accounts, but there are a couple of small drafting points. I think we need to make up our mind whether June 2025 has already happened or whether it hasn't, because in some places we seem to be looking forward, not knowing what has happened, and in some places we know what has happened. So I think that needs just reading through just to tidy that up. I also have a personal prejudice against using relative in the way we do. I think we mean in comparison to other authorities rather than relative to other authorities. But it's a very valuable statement, which actually I think helps the public understand exactly what we do and how we make use of their money. And so I do congratulate you on that, and thank you. Are there any questions about either that text or about the accounts themselves? Two things come out. One will come to in Treasury Management, but obviously we were forecasting that Hermes was about to go into problems. And the other thing that leaps out is that in the end, not unexpectedly, it costs us an awful lot of money, which wasn't entirely grant aided, to actually bring the Blackfriars site up to a point where we could actually sell it in good faith to the housing company. But since that site had sat around undeveloped for the best part of 60 years, in a way, I think it's money well spent. But I'm not quite sure how, in a sense, we budget for bringing forward sites in the future. But I think we do need to think hard about that, because there are other sites unbuilt out, either in our ownership or with developers, which clearly is why our housing turtles are falling short of those that we have to build. So there's a bit of thinking to go on there, I think, Charlotte. But unless anybody else has any remarks to make, yes, please.
Thanks, Chair. I just for my completely uninitiated sort of view of accounts speak and the overall picture, is the net effect, if we have undervalued properties, for instance, and then realise that they were worth more, this kind of thing, is the overall net effect better for Rother Council? Are we in a better financial position than we thought we were? I'm just being glass half full.
It doesn't really change the position of the council, because obviously the value can go up or down. What we are very, very much interested in is whether it will have the impact on the following year's resources, which it doesn't, and also in terms of the level of reserves. Any movements in values are then reversed as per the Local Government Act. So anything to do with fixed assets, it is reversed in the MERS, movement in reserve statement, in order to not to hit the council taxpayer because of this fluctuation in the values.
I trust you followed that, Councillor McGurk.
Yes, thanks.
Councillor Thomas.
I just want to make a pretty obvious remark in a way. The public sometimes think that local authorities like ours are spendthrift and, we're not careful with our money and so forth. But somebody reading this report, I think, should get exactly the opposite impression. Not only because, we noticed earlier how many recommendations have actually been implemented, but also because this is a splendid example of transparency. Out of the hundreds or thousands of decisions and records that you keep, one or two errors creep in. But we're able to set them out, say what the error was, what the effect of the error was, and do that in a completely open and transparent way. I think that's what's meant by candour, and I think we illustrate that really well.
I echo that. I think we've now got the accounts for approval. So we resolve that the Council's 2024-25 statement accounts be approved, and delegate authority to myself and to the Section 151 officer to approve any additional final amendments that may be required. I hope very much that they're now in their final shape, but you may trust me to look at it if there's anything else that comes up, and I will report to the next committee. Can I have a vote in favour of approving the statement of accounts? I think, and we're unanimous, I think. In which case, we move on to the Treasury Management update, and we're taking 2 quarters at once. Charlotte, would you like?
Thank you, Chair. Yes, this report brings together quarter 2, which is slightly delayed from the December committee, and we've brought forward the quarter 3 information because it was ready and available, so it made sense to bring them together. But other than the economic outlook, we have reported both aspects, so there's clear transparency for the committee. So as we've talked about previously, our investments are reducing over the course of this financial year from 23.3 million at the end of quarter 1 to 19.9 at the end of quarter 2 and 7.2 at the end of quarter 3. It should be noted that that is just a snapshot in time, so that's just one day of the quarter, but they are reflective of the general trend and our general use of resources, increased borrowing and reduced cash balances that we're holding this financial year. Whilst borrowing fell, as at 31st of December, from 36.2 million to 31 million, overall borrowing had increased from the beginning of the financial year from 28.8 million. We are currently in quarter 4 taking up additional external borrowing, and the kind of key reasons for that is as our capital programme progresses, we're borrowing for the capital programme itself. We've also now exhausted all of our internal borrowing options, which is where we use general council resources that we have available at our disposal to avoid externally borrowing, which has been our Treasury approach for the last couple of years, where we've had a large number of grants, but we're now largely exhausting those. And as you'll have seen referred to in the paper, we have quite a large amount of borrowing, and as the external auditors alluded to, quite a large amount of borrowing lending to the housing company currently. So on that point, the council has lent an additional just over £20 million this financial year through the development facility agreement to the housing company. And at the end of quarter 2, we had lent them 24.6 million, and at the end of quarter 3, 29.1 million. So we are headed towards the peak debt of that particular scheme, and that contributes to our overall Treasury management position. So as a result of that additional borrowing that we're undertaking and the reduced cash balances and the closure of the Hermes investment, which we've discussed at length at this committee, the council's interest received forecast for the year is 670,000 against a budget of 1.2 million. So we are quite a way down on that picture. We've received 528,000 at the end of quarter 3. Therefore, as noted in the report, our net financing cost to net revenue stream is currently forecast to be just over 7%, whereas the budget was set at just below 2%. Now, those positions that I've just noted there don't include the interest receivable from the housing company, although obviously we are assessing that and monitoring it regularly. That income is currently forecast to be 1.8 million. The reason I haven't included it in those particular numbers is, as you're aware, the housing company is currently rolling up that interest, which means they're not paying it to us in cash terms as the months flow by and as it becomes due. They're rolling it up, and once they're in a position to start repaying it, then those funds will transfer to the council. So finally, the report also updates the current economic picture. I've only reported this for quarter 3 because there's not much point looking back on what forecasters said in the prior quarter. But base rate is now forecast to fall to 3.25 by the end of the calendar year. And similarly, the latest CPI stood at 3.4, but is also forecast to reach the Bank of England 2% target by the end of the calendar year. I'll pause there, Chair, if that's okay. Happy to take any questions.
Are there any questions, Jude? Tony?
Thank you. Under the property funds, number 28, where you talk about Hermes losing a loss on investment of 423,000. We actually made money on that, didn't we? So as I'm reading this, I read the public's report, if you like, what they're going to get. As a member of the public, I'm just looking at that we've lost that money. I feel perhaps after you said the representative loss of investment of that, it could have been inserted, but we actually made, because a member of the public, I'm just looking, Rother District Council just lost 400 odd grand. So I think sometimes with some of these reports, it would be good as a member of the public to be more explicit that we actually made money on it. I know we lost that little bit, but overall we didn't lose, did we? So it's just something just a little point I think might be made because members of the public get a misconception of some of the stuff that's been put in the report. Thank you.
Yeah, thank you. Yeah, very fair point. I think we have reported it previously. Off the top of my head, I think it was just over 600,000 that we made on interest over the term of that particular investment. But yeah, it's a good point. Us accountants tend to be slightly dour in our approach.
Yeah.
Take that on board.
Thank you.
I think it's probably worth noting that this was a forced sale. Normally you would sell at a time of your choosing, but this was forced on us by the reconstruction of that fund, and they decided that local authorities could no longer be members. So we lost on the capital value because obviously the markets were down at that moment, but we gained overall because over the years we had a very substantial rate of interest. And the same is true actually if you look at the CCLA, that currently is down in its capital value on the original investment, but again it's still paying a very handsome return each year. I have asked that we bring forward a report on CCLA to our next meeting because of what has happened on Hermes. I think my inclination, and probably that of the officers as well, is still to stay with that and not sell it. But I thought the committee should at least consider the position there. So we will look at that at the end of the financial year. Are there any other questions that people want to follow? No? Clearly, we're not going to make as much income this year because as interest rates come down, that may cheapen the cost of borrowing, but it means we can actually use that less to our advantage with the amount of money that passes through our accounts. We are keeping a very watchful eye on the Public Works Loan Board rate because clearly we've covered a lot of our capital programme by building up finance in advance at very low interest rates and by borrowing, internal borrowing of one kind or another. That rather halcyon period has come to an end and borrowing is going to become costly but will remain very necessary. That is one of the less happy signs of what is actually an improving situation for most homeowners and other people, but we don't benefit. Councillor Thomas.
It's on a different point, Chair. In this report, there are references to borrowing money for 5 years from the Public Loan Board. Obviously, that's probably beyond the lifespan of the council. Do we know how that's going to work with the successor authority? Will the loan simply be carried on to whatever organisation replaces? And do we know at what point we've got to get approval from the successor authority or the shadow authority before we enter into a loan. Do we know that yet?
Yep. That work stream hasn't commenced yet, but I think everyone's expectation is that the preparing authority will take on the PWB debt or any other debt that the respective authorities in East Sussex hold. In terms of dates, so structural change, section 24, which will follow the structural change order, which will it is the piece of legislation which covers the types of decisions which the preparing authority will be able to have oversight over. Doesn't specifically mention the raising of debt as far as I'm aware. However, it would seem appropriate that we would start to have those conversations with respective officers, and there will be a number of work streams that will commence, and the Chief Execs and Section 151 officers are looking across East Sussex at what those might be. So I imagine in 6 months' time there'll be quite a lot of work underway on that front. It's just a little bit too early now.
Given what has happened today on elections,
Who knows?
I hesitate slightly before saying what I'm about to say. But we don't get a decision yet on dates or indeed on what type of authority we have going forward until next month. Harking back to 1974, it took quite a bit, really the first half of the first year, for the shadow authority for the unitary, it was then a county council and district council shadows. It took them about half a year to get their act together. Thereafter, increasingly, the government regarded the shadow authority as having a veto over decisions by the existing authorities. I imagine something the same will happen this time. I don't know, Lorna, do you want to comment?
Yeah, just to come in on that. So as Charlotte was saying, the Section 24 direction will have particular powers which will go, assuming it's one East Sussex, that the model that the government chooses, they will be able to veto certain decisions as such. I think it's £1 million on capital and £100,000 on revenue. But as Charlotte says, it doesn't cover issues like debt. But Charlotte's quite right in what she's saying. So obviously we haven't got a decision yet. Councillor Barnes is correct. We're expecting that mid-March. And then when we do have a decision, we'll be looking at implementation and how all that works. At the moment, the government's consulting us on the structural changes order. But when that structural changes order is actually made, which will be later, probably in the autumn, those powers will come in after that. So we've still got some way to go, and yeah, we'll be very, very happy when we have an outcome and we know what's happening going forwards.
I think we simply have to note this report, and I take it everybody is happy with that. Yes. Thank you very much indeed. Now, the next paper is one that we asked for, which is a summary of the debt management framework and write-offs, pages 91 to 96. Charlotte, do you want to introduce this?
Thank you. Thank you, Chair. Yes, at the December meeting, the committee sought some further information on write-offs and the associated framework that we operate within. So this report explores write-offs that were undertaken between November 24 and December 25, only covers sundry debts, which was the category that we were talking about. So a total of just over 61,000 across 168 debts was written off in that period. The majority of those, as the report states, related to the housing service and homelessness cases. But there is a summary included in the paper at paragraph 9 of the debts across the service areas that they related to. This committee had specifically requested some information regarding the COVID debts that the internal auditors have previously reported on, and that is summarised in paragraph 10. Obviously, I can't go into discussing individual debt cases at committee, but if there are any specific questions, then I'm happy to sort of take those offline if necessary. The report also covers at a high level the debt management framework, paragraph 15 covering the kind of key reasons for potential write-off that we would consider and the key steps currently taken. And it also covers the kind of next steps of work that we have underway at the moment, whereby we're refreshing the process notes that officers operate within. We're looking across East Sussex to see where we can update those process notes and gain alignment with our respective East Sussex councils. We're also updating officer delegations more broadly at the moment, and not specifically for this purpose, but it provides us an opportunity to look at that, and updating the process notes in line with the finance transformation programme work. So I'll pause there, Chair, but I'm happy to take any questions there might be about the paper. Hopefully it serves the purposes of what the committee were looking for.
I think it's very important that we discuss the principles rather than particular cases. And I will caution you, therefore, not to go into detail. If you want to go into detail, we will have to go into confidential session. But at the moment, I propose to take this discussion in public. Now, anybody want to? Councillor Byrne.
Thank you, Chair. Housing. Now, it specifically says that this does not include overpayment or anything to do with revenues and benefits. So what does it? I was trying to go through in my mind what are the main areas that contribute to that general term of housing?
Yeah, the vast majority of those cases relate to removal or storage of possessions. So homeless cases, where they have possessions and those possessions need removing and storage whilst they're in temporary accommodation, and then the associated recovery of those costs.
Fine, thanks. Because I'd looked at that. I hadn't thought of removals and storage, because I couldn't work out why are homeless people costing us anything other than the lines that are specifically excluded from that figure. So thank you.
Thank you. Yeah. We only go back to November 24, although this council's been sitting since May 23. So I take it was debts before November 24. Is there any reason why we only went back to November 24?
Sorry, perhaps that was my misunderstanding. I thought the committee had asked for the prior year. So the committee met in December, so I took it back a year from that point. I mean, can go back further if it's. I could ask for the report to be rerun for a prior period if it's helpful. That was just my understanding that it was a year's worth of data.
Second question, do we ever take people to court? Because I sit in a courtroom, I've sat in a courtroom for many years, and Hastings Council come before us on a regular basis where we sign off for them to go and collect their debts from people. I've never had anything from Rother come in front of me. So I'm just wondering, perhaps it might be a different court you go to, or do you actually come to court?
I think there have been a very limited number of cases that have progressed to court. So cases are referred to the legal services team, and then we work with legal to consider whether they should come forward. I don't have the data in terms of how many, if any, have made it to court over that period, but I certainly could ask legal services for that information.
Thank you. Just an observation, say that Hastings, I've never had anything from Robert, that's why I was wondering.
I presume that most of those cases will be non-payment of council tax, because we only collect about 98% of council tax, I think.
So we certainly do proceed with council tax and business rate cases. This report doesn't cover that type of debt. We've only covered sundry debts here.
Thank you. Any further questions? No, in which case, I think again, we receive the report and note it. I don't think we need vote on that. Everybody is agreed. The final item tonight is the appointment of an independent person. We interviewed one candidate for this post, Tom Davies. You will have seen his CV, and he is extraordinarily experienced. What we've decided to do is to appoint him for 1 year with the possibility of extension for a further 3 years. That obviously might be less given the decision that's imminent in March. This has to go to full council for approval. I will make sure that we do invite Mr. Davis to attend our March meeting as an observer. But I really reporting on my action and asking you to recommend that William Davis, Tom is not his given name, be appointed to the Audit Committee for a period of 1 year as audit independent person, with an option for the Audit Committee to extend the appointment for up to a further 3 years, up to the point where a successor authority is in place. I will move that from the chair. Can I have a second? Councillor Byrne. Those in favour, please. That's carried unanimously. Thank you very much for that. We will then move to the work programme. And are there any comments on the work programme? Charlotte, yes?
Thank you, Chair. Yes, just a note, because we brought the Treasury Management Q3 update slightly early to today's committee, we won't be bringing a Treasury Management update on the 23rd of March because the fourth quarter won't have concluded, so we won't be ready to take anything. Thank you.
Yes, and we obviously need to look at self-assessment. So Charlotte will recirculate on that. And again, I would welcome you endorsing my decision, which is to defer Treasury Management training. We're so close now to the appointment of a new committee. I thought really we should defer that training till after the new committee is appointed. The other thing which came up at our pre-meeting, I think the social benefit weighting given to the devolution of assets is something we thought we ought to keep an eye on. Clearly, best value goes beyond simple economic value. Very often the value to the community is what we're really concerned about, given the successor authority is likely to start in debt. And it seems sensible that this committee keeps an eye on that process. Councillor Byrne, you look a bit doubtful about that.
No, not at all, just redeclaring as a member of Bexhill Town Council. We are particularly exercised about the social value element to valuations and essential cost of transfer. So yes, more visibility on that, the better. And I'm sure the public are really interested in how that works and just what the weighting is. I know it's going to be difficult to summarise because we wouldn't expect a report on asset by asset. There's, 116 of them or something. But if it's possible to give a general flavour as to as just how much weighting social value could, how much weight that could have in each decision, without going into how much it actually did have. So, again, as I say, as a member of Bexhill Town Council, very interested in that, and I'm sure the public would like to see how Rother is dealing with those assets as they come down, not just to Bexhill, but to all the parishes as well. Thank you.
Councillor McGurk.
Thanks, Chair. Yeah, and I like how you put that, Councillor Byrne. The issue of social value, I think, is a really important principle to bear in mind throughout this process. I know we took a decision, or some of us took a decision earlier on in the year, but as the process has carried on and the discussions about assets have got closer to the wire, certainly in Rye, I'll give you for instance, so the salt area of Rye, and I know we're talking generally, this is audit, but just in terms of social value, really welcome the opportunity to take on and manage more locally the salt area of Rye, which has a huge amount of social value. But then we've come to understand more and more as the process has carried on, at least locally, that without even a small portion of revenue generating assets connected with some of those assets that hold such social value, it's a challenge. And in terms of, I think it's important to bear in mind from an audit perspective that we keep that at the front of our mind. It's not just a financial an asset, sort of purely asset-driven process, but it is the principle of social value for those assets as a whole and what they present and what they can offer to our communities is really vital, really important for us to continue to bear in mind.
Sir Thomas.
Can I just add an extra declaration, which is as a trustee of community supporters. And so I don't want to go into any details at all, but just to simply say that when we're considering the transfer of assets and the question of social value, I think it's important to recognise that community organisations also take an interest in that process. Yeah, nothing wrong with that.
I think all members are really very conscious that a number of our assets and a number of our services are vulnerable, and we would want to see them survive rather than be sold off or closed down. And I think the Cabinet have that very much in mind. But it's no harm that the Audit Committee, which is responsible for looking at the efficiency and financial health of the organisation, does actually keep itself abreast of that position and its effect. And so I would ask the Chief Executive to keep us in the picture on that one. I think that brings everything to a close at roughly 7:25. Thank you all very much for your attendance, and thank you to all those watching. Very grateful indeed to Grant Thornton for saying. Meeting is closed.